cardinal rule when it comes to risk is higher risk, higher return, and low risk, low return. Hello millionaires, welcome back to the YouTube channel, the best place to learn and share about budgeting, saving, investing, and all things financial literacy. My name is Gertrude, and in today's video we're going to go through how you can create an investment portfolio to serve your various goals. In this video, we're going to look at 1. What is an investment portfolio? 2. What is the purpose, or do you really need an investment portfolio? And 3. What you need to do before you create the investment portfolio. And lastly, how you can create an investment portfolio. Now, if you're new to this channel, hit that subscribe button so that you can never miss a video like this one from this video. Now, let's get into the video. Now, first things first, what is an investment portfolio? In simple terms, an investment portfolio is a set of investment assets owned by an investor. Now, some of the investments could include bonds, stocks, circle shares, and so on. Let's start with why should you even create an investment portfolio as an investor? Now, the first reason why you should create an investment portfolio is for you to make sure that you have created enough streams of passive income. Now, the second reason why you should create an investment portfolio is for you to create diversification. Now, having various asset classes, that is the various investments on your portfolio, will create diversification. That is, having various types of asset classes under your name will help you spread the risks associated with investments. Now, for example, in this risk pyramid, we have various types of asset classes which have variations in risks. For example, at the top we have crypto and shares, and at the bottom we have low risk investments such as bonds and so on, government bonds, that is. Now, the third reason why you should create an investment portfolio is for you to attain financial freedom. Now, imagine having assets worth 10 million, and in that investment portfolio you are getting an annual return of at least 10% per annum, meaning you'll have over 100,000 in passive income. Would you really need to work again? Working would be a choice and not a need. Now, the fourth reason why you should have an investment portfolio, it is your investment portfolio could serve as a retirement plan. Now, once your returns from your investments exceed your monthly expenses, you could easily retire. Need I say more? Now, I will give you 2 features of a great investment portfolio. Now, the first feature of a great investment portfolio is that it needs to be well diversified. This is to ensure that your wealth is preserved and the risks associated with investments are well spread. Now, the second feature of a great investment portfolio is liquidity. That is, how fast can you turn your investments into cash? Now, this is a question of between solid assets such as land and other types of assets such as investing a percentage of your money in a money market fund. Make sure that you balance between the solid assets and the liquid assets as well. Now, let's get into the next part of our video, which is how you can build an investment portfolio for yourself. Now, there are some things that you need to do before you get into the construction part of the investment portfolio. Now, the first thing that you have to do is to ensure that you have an emergency fund account. This will prevent you from liquidating your assets before maturity. Now, the second thing that you have to do is to pay off debts. Now, this can go hand in hand as you are still in building your investment portfolio, but make sure that you are eliminating your debts. Now, another thing that you have to do is to make sure that you are making investments that you understand what you understand. Now, before we go on, I'd like to mention that you can check out this playlist right here, which has various investments that you can make as a Kenyan in Kenya. Now, when it comes to building your investment portfolio, there are some things that you ought to look at. Now, the first thing when building your investment portfolio is to know your investment objective or goal. Now, for example, let's take an example of someone who wants to retire early. Their goal will be to retire. Now, the second thing that you have to do to consider when you are building your investment portfolio is your risk appetite. Now, remember that the cardinal rule when it comes to risk is higher risk, higher return, and low risk, low return. You are comfortable with taking on higher risk, then well, go ahead. But if you cannot stand to see your investment going down by more than 50%, then stick to low risk investments. However, when it comes to an investment portfolio, you can balance the risk out. Now, for example, you can have a mixture of high risk and low risk types of investments for example, you can have a mixture of shares, real estate, investing in SACCOs, money market funds, bonds, and so on. The thing is, know your risk tolerance. That thing that you have to do is to pick the various asset classes that you would like to include in your investment portfolio. As we said, there's so many investments that you can make. For example, you can invest in shares, you can invest in treasury bills, government bonds, real estate, SACCOs. You can even invest in land and so on. The choice is yours. Pick a few at a time, but as a beginner you can start with one and build from there. You do not have to pick a group or various investments to begin with. You can start with one, then from there build. Remember that in building an investment portfolio is not a one-day thing or a one-year thing. You can build it over a long period of time. That brings me to the fourth step, that is know your time horizon. For example, you can be around 25 years, and as we said earlier, your investment goal or the goal for building this investment portfolio is retirement. You can be around 25 and you want to retire when you are around 65. That means the time horizon, your time horizon is 40 years. That means you have so much time to include different asset classes in your investment portfolio. Remember that the goal does not change. The combination of assets might change, but do not change the goal. Well, that's it for this week's video, and I'll see you in this one.